You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phone. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today's Thursday, 9th day of April, 2020. Thanks so much for joining us. Whoever you are, wherever you are, we're glad to have you right here, right now. If you can't see the screen I have up, go to our homepage at cfrn.net. On the right-hand side, click the big microphone, follow the instructions. You'll be registered in about 30 seconds, and that will give you one-click access to the show each and every day. On the days you're out of the office or away from your desktop, point any internet-connected browser to cfrn.net/live, and there you'll find a live, real-time simulcast of the show as it unfolds. You'll also find us streaming live on Facebook, YouTube, and Twitter. All right, let's open, as we've been doing of late, with a word of prayer. Father, we thank you for the many blessings in our life. We thank you for giving us the the courage and the strength to endure this situation that we find ourselves in. We pray for all of those who have been touched by this virus, those who are sick, those who are recovering, and those who have lost loved ones. We also pray for the doctors and for the nurses, for all the healthcare professionals who are putting their lives on the line for us. We pray, God, that you give them strength and physical immunity during this time so that they can help push back against this ravaging virus. We pray for the scientists, for all the experts who are working on vaccines and testing mechanisms. God, we thank you for gifting them with knowledge and wisdom that we don't have. We pray for their endurance. We pray for breakthroughs. We pray for resources. You are the great physician. So we pray for healing for all of the victims. You are the creator with power over the creation. So we pray that COVID-19 be destroyed. You are the great comforter. So, God, we pray that you would bring comfort to every troubled soul. And Father, we pray that you would move in the hearts of all public officials. As you instructed in your word, we pray on behalf of our president, Congress, governors, mayors, local officials. We pray you guide them with wisdom and strength and discernment. We pray, God, for all the people in our nation, in the nations of the world. We pray that everyone be humbled and turn to you in repentance and faith. We know that you are the Prince of Peace, the Lord of Lords, the King of Kings. We praise you for your goodness and for your mercy. In Jesus' name, amen. Okay, let's take a look at a chart. We're having another up day. How far up? Well, we've now hit that 50% reverse fib. And we just drew the fibs from these most recent swing highs, going back, probably February 19th, down at the low put in on March 23rd. And from that low, we bounced to the 38% fib and the BBC. We struggled there for 1, 2, 3, 4 days, couldn't get through. And when price can't get through resistance, it's going to go look for support, which it found at blue and climbing. The official terms is CFMA1, but red and falling. Blue and climbing is pretty descriptive. This, think resistance, think bearish, think short, think bullish, think support, think higher prices. So price leaves resistance, comes down to support, and just as we hung out a few sessions at resistance, we've just been riding this blue and climbing for 1, 2, 3, 4, 5 sessions. Today we've popped up a bit and we find ourselves no longer touching the BBC, no longer touching blue and climbing. If we can close this session at this 50% fib, or perhaps even slightly higher, then we'll just be looking for a pull back to the BBC, and we'll look to start building legs to the upside. Hold on for me just 1 second. All right, where we left off, 50%. Reverse fib. That's where we are. Overhead, we've got the 62. If we can clear the 62, then these swing highs right here, potential resistance. And then the area that on this move up, and whether the move up comes within the next few days or the next few weeks, whenever it comes, when we get to this area, we should expect good resistance. All right, let me give you the numbers from around the world. These are the cash markets, or the indices as they're called. Starting here in the US, currently, let me pull in fresh data. There we go. The Dow currently up 470 points, 2%. NASDAQ up 80, 1%. S&P 500 up 53 points, almost 2%. And the Russell 2000 up 47 points, almost 4%. You know, they're talking about this, how did it go? This could be the best up week since 1938 or something. I love these statistics. They amaze me. Okay. In the commodity basket, crude oil up 7 cents. Make that 70 cents. Trading 25.79 last. Gain of 2 3/4%. Gold. Look out, gold. Up $55.80. Trading 17.40 last. That's a gain of well over 3%. In the Asian markets at the close, the Nikkei posted a loss of 7 points. Shanghai gained 10. The Hang Seng gained 329 points. That's a gain of 1 1/4%. And in the European markets at the close, FTSE up 164 points, 3%. DAX up 231, 2 1/4%. And the CAC up 64, a gain of 1.5%. That gives us a mixed day in Asia, only because of the Nikkei being down just 7 points. Green day in the UK, and it's a big green radio Thursday here in the US of A. So with that, we'll go to Michael, get a recap of what happened this morning in the live training room. After that, we'll talk to John. Hopefully he's feeling better today. And today's Thursday, so we do expect Dr. Tom to drop in at the top of the hour. So with that, let me drag Michael's charts up into the viewing area. There we go. Good morning, Michael. Michael, I don't have audio on you.
Okay, there we go.
There we go.
There we go.
Okay.
Okay,
Alrighty, it's all yours.
good to go. Okay, here we go. And as far as that thing with the no gap, eventually they're going to push everybody from Ninja 7 to Ninja 8.
Mm-hmm.
As a matter of fact, right now, they're some of the people, they're not letting them get Ninja 7. They're making them take Ninja 8. So it's going to be an issue at some point.
All right. Well, whatever we need to do.
Okay. All right. Here we go. Good afternoon, everyone. Today is Thursday, the 9th day of April, 2020. If you've not taken a free trial with us and you want to take a free trial with us, go to the homepage at CFRN.net. Right over here in the right-hand column, it says 5-day free trial apply.cfrn.net. Or you can scroll down to where it says free 5-day trial. Click on that. Either one is going to get you to this page, where all we ask for is your name, your email, your phone number, and you can tell us your biggest trading challenge so we can tailor one-on-one training just for you. Hit the send button, and you'll be sent a confirmation link. You must click on that confirmation link. Okay. If you don't click the link, we don't know you took the trial. Okay, so today we had, well, before I say that, I have to say this. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. As I said, it's the 9th day of April 2020. Today we made 9 ticks in crude, 41 ticks in gold. That put us at plus 500 on the morning session. Today, for some reason, it took me 32 minutes and 3 trades to get to the goal for the day, and that was our first trade of the day, and we made 30 ticks on that. So we're up $300 on that first trade. We took a total of 7 trades this morning. On the month now, we're at $3,353. That's over 7 days, averaging $479 per day. On the year, we're at $25,327. That's over 65 days, averaging $389 per day. Now, again, that's one contract, 2 hours per day. Okay, this here, same thing, one contract, 2 hours per day. And really, I'm only getting about, I'd say 10 to 20% of the trades. There were so many trades this morning. If I was totally focused on just the markets, or just the ES for that matter, wow. If I was totally focused on just the ES, I could have easily tripled that. Easily. But the markets are just crazy today because there was so many things that were happening today. I don't know if Dwayne went over the news events, but let's look here and see. We had the Canadian employment change. Almost triple what they were expecting. The unemployment rate went up 2%, 0.2%. We had the Fed announcement this morning, which was unexpected. That was new. You see, it's got a star right there. The Fed announces additional actions to provide up to $2.3 trillion in loans to the economy. That was unexpected. Unemployment claims, they came in lower than the last month, but higher than expected. Okay, I don't know why they were expecting 5,000. Well, 5 million is what it is. But if you look at the chart, and this is what I was doing this morning in the room. If you look at this chart right here, this is what it was during the old Trump administration, right? And then coronavirus hit, and bang, bang, bang. But look, it's going down. You see the slope up there? That's what you want to see. The core PPI came in better than expected. That's good. PPI month over month came in better than expected. That's good. And then we get in here. So we had Powell speaking. Trump was speaking. We had consumer sentiment. Wholesale inventories came in better than expected. Consumer sentiment came in lower than expected. Inflation expectations came in, well, pretty close to last month. Natural gas, I gotta refresh this. Hang on. Natural gas came in higher than expected, which is bad. I mean, again, people just, they're not using petroleum fuels right now, or not as much anyway. And we also had OPEC here, OPEC meetings all day. So this was really messing with the markets. That Powell, the Fed announcement, unexpected. So many things were moving the markets around today. That it was crazy, and it was. I mean, there were so many trades. I'm not going to go over all of them. I'm just going to go over a few. But there were so many trade opportunities, and if you are a partner, a CFRN partner, and you were not able to make money today, then we need to get together because you're doing something wrong. Okay. Hang on, my charts just froze up. All right. So our first trade. Yeah. Where is it? Our first trade was on gold. Actually, our first trade was on the ES. But our second trade was on gold. It was 32 minutes in. Okay, so it was over here. I don't know why it's not showing. But I know I marked it up this morning. It was right in here. I think. But I captured a big leg down. Anyway, for 30 ticks. And then I just highlighted the rest. Why is it not showing? Anyway, the first trade was, it was on a leg like this. And we picked up 30 ticks. But I think it was over here. But I have it 32 minutes. So that should be right in here. I don't know why it's not there. I mean, everybody that was there this morning saw me do it. Then we had a few more opportunities. Well, we had a bunch more opportunities. You know, there was a long opportunity right here for the leg up. Another long opportunity here for the leg up. Then it got kind of choppy. There was a long opportunity here for that little leg up, but that's enough to get the goal for the day. Then we get over here and we had a short right here, which would have been a break even. Another short here, which probably would have been a break even. Then it got choppy and I was just drawing trend lines. Then we went into the break. Here we had a long opportunity. Here we had a long opportunity. You got to watch the slingshot because that's going to tell you the story ahead of time. Sometimes it may be a second ahead of time. Sometimes it may be a minute ahead of time. But either way, you got to watch the slingshot. So during the break, oh, that's why I don't see it. That's yesterday. That's why I don't see it. Nobody caught that? I know I marked it up. Hang on. I'm scrolling back to today. Okay, and it just went too far. There. That's where it was. It was in a congested area like that. It had a big leg down like that. We picked up 30 ticks on that move. Then, you know, there were a bunch more trades going through the morning session. Yeah, there was a trade in here that would have been a break even. No trade there. Trade there, trade there. Trade, nope, not there. Again, I'm looking at the slingshot right now, and then look up at the price and see if you actually did get a trade set up. See, we weren't trending here. That's why I didn't highlight anything. All right, over here we had a long, then another long right there. Now you see, when it pulls back like this, and it gives like a really sharp turn, there's usually going to be something going on up here on price. In this case, we needed to establish a trend, which means you wouldn't have had to trade until this one. Okay. And then it shifted, turned around, and didn't give us anything. And then it had this huge run up. So we had a long there, a long there, a long there, a long here. And a shorting opportunity there. We picked up 10 ticks here. On this short opportunity, we missed that one, but we picked up 10 on this and 1 on this. And that was pretty much it for gold for the day. Okay, for us this morning. There was another opportunity right here, you know, and then getting into the break, there were more opportunities. Like right there. And there. There. And there. I mean, there was just so much opportunity today. If you were trading what we teach you how to trade and you did not make money today, then we need to have a meeting and figure out why. Okay. And that was just gold. Now the euro was not, well, it wasn't moving around like everything else was today. You know, it had a little bit of volatility. And on a normal day, you know, this may be the new normal. Oh, what are you saying no to, James? This may be the normal, at least for a little while. I think for probably the rest of the year is what I think. But on the euro, there wasn't a lot of opportunity this morning compared to the other markets. You know, you see me drawing these trend lines, and you know, you couldn't do anything with this one. You couldn't do anything with that one. Right there was an opportunity. Oh, yeah. The hunt for my trade in yesterday's charts. Yeah, I was on the wrong day. I scrolled back too far. This was going into the high of the day at the time. Okay, there was a nice short trade right here, but this was during the break. Okay, and then things flattened out. So the euro didn't provide much. Crude oil was crazy today. It's still on April 9th. Still on April 9th. Now on crude, I'm not going to go over every trade setup that there was because there were just too many. And I only took a couple of crude trades, and I was up 9 ticks. But we started out right over here. Long trade right there. I don't know how many ticks that was. What was that? 26.53 up to 26.77. So there's $240 a contract right there in that little leg. And that took probably less than a minute, I'm sure. 31.43 to 32.47. Okay, it took more than a minute. It took a minute and 4 seconds. Make $200 a contract right there on crude. And then you see it got a little bit messy here. And again, you have to watch a slingshot. When it gets crazy like it is right now, you have to watch a slingshot. See the green line pull away from the cycle. The green line pull away from the cycles. Look up here, see if you got a trade. We had one there. We had one there. There. Nope. The slingshot got messed up down here. It fixed itself though, and we got one there. And then you see how the cycle is up above the green line here. So there's no trading on the short side when it's like that. Okay. Then it tried to correct right here. Looking for the trend to really be established. See, all these bars were in 1 minute. So crude was just, it was crazy today. And it was actually really hard to trade for me. There were times that there was a spread in crude. But right there was an opportunity, right there. and then it changed directions, or tried to. And look down here in the slingshot. You see how the cycle is just going around like this? You can't trade when it's like that. Okay, and then right here, I don't know what happened right here. There was a long opportunity on the up close of this bar, and if you got into it, well, then you made a bunch of money right there. And then retrace the whole thing. You see that? It retraced the whole thing. And it gave shorting opportunities there and there. But again, this is all within 1 minute. So these are seconds right here that this is happening. And, you know, I went to the 1 minute time frame this morning just to take a look at it. And, you know, it was easier to trade in the 1 minute time frame, but you got to have a little bit more risk. Okay. And I can show you that, but see, so right now we're an hour in right here, and right there, and right there, and right there. Long trades. I mean, the markets were just nuts today. It was overwhelming for me. So guys that were in there on the trial or the open house today, well, they got an eyeful. Long trade right there. Here's the trade we took. That was a break even. Now, meanwhile, you know, while all this is going on, 2 of the other 3 markets were also going crazy. So I had to focus on something, and gold is the one that I ended up focusing on more today. Yeah, that's the one that I focused on more than anything else today. I'll have to go look, but no, that's okay. Yeah, no, I mean here, you know, crude oil was it was worse than gold, really. I mean, not worse, but I mean harder to trade in gold because it was bouncing around so much. Yeah, it was. And you know, we don't usually have a spread on crude, and we did today. I mean, but there were trades here and here and here, and you know, and then it flipped around. Tried to retrace some of it. It did about half of it, probably 62%. It gave along here, and then it went sideways for a little bit, but you get the picture. We made 9 ticks on crude today. There was one other trade where we picked up 9 ticks. And I'm not exactly sure where that trade is. I might have skipped by it. But the ES is going to be the same thing when I go over the ES right now. Now let's look at this on the larger time frame. All right, I like the 15-minute. But so we started out spiked down, spiked right back up, then back down, and now we're right back where we started. Okay, so the markets are just crazy today. And Alex, I don't know if you're in here, but I'm not sure you want to trade today. You know, we'll have our meeting, but 2 o'clock. 2 o'clock. Okay, and Bill's not in here. Not that Bill. Anyway, there are a couple other Bills in here, but not that Bill. The markets are closed tomorrow, Brett. Okay, in the ES. Yeah. Easter Monday. Okay. Well, we'll be back to normal on Monday. Probably. Sunday night's going to be a mess, though. The Globex markets open Sunday night. If they open Sunday night. I'm not sure if they do. Okay. So this is what the ES did today on a larger time frame. And so what it looks like it's trying to do right here is break this dynamic resistance. And I don't know why I have that line drawn up there, but I'm going to take it off. What it looks like it's trying to do is break this dynamic resistance. So on this current 15-minute bar, if we close up above the MA1, we're going to have higher highs. That green line's going to get up into the cycle. But then we're going to have a dramatic pullback, is what it looks like. So on the ES, we only had a couple of trades. There were probably 200 trades this morning that set up. But it was bouncing all over the place so much. And, when the markets get like that and I'm up $500, I take the time to train rather than trade. So you guys can see, see the setups as they're coming. Okay, yeah, we had a break even here, we had a break even there. There's a long opportunity there. And I'm not going to go through everything here on the ES because there are just so many. There's one there. Then you had to wait. Look at the slingshot. Watch the slingshot. Long there. Look at the slingshot. Watch the slingshot. Long here. Short here. Put that leg down. Then it flipped around. You want to establish a trend. We didn't ever really have a trend there, so we're not doing anything. I'm watching the slingshot. Watching the slingshot. Still watching it. Okay, then we get this big leg down. Now in this leg, we had a short there, a short there, a short there. I'm scrolling right now, but it's not moving. And that was all in the first half hour. A short here, a short here. A short there, a short there, and there, and there, and there. And that was all in the first hour. I mean, y'all get the picture. I only made I had break even on the ES today. I made 9 ticks on crude and 41 ticks on gold. And that's one contract. So I'm not going to go through the whole morning thing because it would take forever. And we have a couple of people coming on right now. So I will go through this. If you're going to read the spreadsheet, you could read the CFTC risk disclosures down at the bottom. Today is the 9th day of April, 2020. We made 9 ticks on crude, 41 ticks on gold. Put us at plus 500 on the morning session. Today we made, it took 32 minutes and 3 trades to get to the goal for the day. At that point, we're up $300 a contract. And we took a total of 7 trades. On the month, we had $3,353. That's over 7 days, averaging $479 per contract. On the year, we're at $25,327. That's over 65 days, averaging $389 per contract. That is one contract, 2 hours per day. And as you can see, I miss 90% of the trades right now. And we're still killing it. Okay. If you have not taken the free trial, go to the homepage at CFRN.net. And right here in the right-hand column, it says 5-day free trial, apply.cfrn.net. You can click on that, or you can click down here, free 5-day trial. Either one of those, either one of these is going to bring, I don't know why that thing always comes up. Either one of these is going to bring us to eminitrainingschool.com. And here, all we ask for is your name, your email, your phone number. You can tell us the biggest trading challenge so we can tailor one-on-one training just for you. Hit the send button and you'll be sent a confirmation link. You must click on the confirmation link. Okay, if you don't click the confirmation link, we don't know that you took the free trial. Okay. Okay, and with that, we can pass it back out to fabulous Phoenix, Arizona. Studio A overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
Yes, sir. I'm ready. A recap of the recap.
Today it took 32 minutes and 3 trades to get to $300 per contract.
That's a good bingo. Did a good job.
Thank you.
Okay. Well, let's take a peek at the results this week so far for Logic 247. We are in week 88. These are the numbers as of yesterday. These are the numbers as of today. Today, we've had a total of 48 alerts issued, 11 never triggered. That left us with 37 actionable alerts. 6 of those were stopped out. That's 16% of actionable alerts. Yesterday, we were at 13%. So, our average, those numbers are still better than average. We averaged over the last 88 weeks about 20% of the logic alerts being stopped out. Now the logical alerts, those are the ones that come to you via Telegram in the private Telegram channel around the clock, 24/7. We start at 6 p.m. Eastern, Sunday evening. And we keep the pedal to the metal right up until Friday afternoon at 5 p.m. Eastern. So you're as likely to get an alert at 2 a.m. as you are at 2 p.m. The criteria for posting a Logic 247 alert is simply opportunity. When opportunity presents itself in one of the markets that we follow, that's when we post the logic alerts as opportunity presents itself. The other alerts, the Concierge Trade Alerts, that is a static report published once per session, shortly after the Globex Open, typically. And I will drag up to the screen last night's alerts, and if you want to grab a screenshot, you can do that. Last night they got out at, we were a little late last night, 10:15 p.m. Eastern. The markets that you trade, the idea is that when these come out, you go to your chart, you put 2 lines in the sand for each market. S&P as example, 2760 and above, we're only thinking about long opportunities. 2691 and below, we're only thinking about short opportunities. So I'll bring up a 30-minute chart and we'll take a look at how that unfolded last night. So they came out again at 10:15. So that's going to be the 2200 30-minute candle, which will be this candle right here. And the trigger was 2760. There's 2760. Okay. Now, from 2760 to that first swing high. The first swing high was 2769 and a quarter. So that was a 9-point trade. That's what the market made available. 9 points. The market does the heavy lifting. Well, we didn't make the 9 points available. We made the opportunity obvious because we put it in the report. Now, important prices and important areas are almost always tested. So, price triggers, delivers a 9-point trade, gets back below the trigger, triggers again. Not unusual. In fact, this only triggering twice might be considered unusual, as most days especially of late, we see triggers 3, 4, 5 times. Last Friday was a very odd occurrence on the Dow. That thing triggered 13 times off of the one alert, but that was very unusual. Okay, so the swing high, 2803. That's a 43-point move. Alexa, 43 times 50.
43 times 50 is 2,150.
All right. So this was a $2,100 per contract move. Getting out at the swing high is difficult at best because nobody knows it's a swing high or a swing low until after the fact. So now on this particular one, 2760, we have no weekly trading zone overhead. We've already taken out the highest weekly trading zone right here at 2696/97. That's unusual. It does happen, but the majority of the time, price will close either below the highest weekly trading zone or above the lowest weekly trading zone. So in situations like this, we can look back to the previous week to see if we had a zone up in that neighborhood. And last week, the highest weekly zone last week was way up at 2895. And the week prior to that was 2859. And prior to that was 2885. So we really don't have any fixed support or resistance. So at this point, you have to just trust your own ability to trail your stop, get out at, if you've got a target, if you're trading for 2 points, 5 points, 10 points, whatever the case may be. Now, we do have a thing called the exit signal, okay? And that's where price, when the move runs out of steam, price will start to walk sideways, the way it did here. Now, what we're looking for as we wait for an exit signal, we want to see this black step line cross over. See how it goes? It steps up and over, up and over. We're looking for it to step over, cross blue and climbing. Then we're looking for the first red candle that closes below the step line. Now we had a red candle close below the step line here. However, the step line itself has not crossed over blue and climbing. Could you have just taken that as an exit? Well, absolutely. I mean, let's face it, you had a 43-point run here. As a discretionary trader, you can elect to get out of the trade, take your profits at any point along the way. If you choose to hold out for the exit signal. And on an extended move, you'll always get an exit signal, but the exit signal will never get you out at the swing high or swing low, because that's just not possible. Okay, so if this candle, now that we've crossed, if this candle were to reverse and close red below the step line, the closing price of that candle would be the exit price. Okay, so far the market has offered 43 points off the second trigger. We pulled back to blue and climbing, where we found good support. That's what we expect. We expect that to represent good support until it isn't or doesn't. Climbing again, and as you can see, we're approaching the swing high. The swing high for the session, 2803 and a half, and the current candle's 2802 and a quarter. So for those of you that are still in the trade, of course, you can continue to hang out and wait for it. Michael, has John shown up yet?
Hang on, I was getting everything ready for next week. Let me see.
He didn't jingle my phone.
No, he's not.
but-
He's not here yet.
Okay, all right,
He's not here
and
yet.
we expect Dr. Tom to show up around top of the hour. Okay,
Okay.
so this was S&P. Let's go to the Dow, and let's see if I can get the right chart up. Where did it go? Hang on. I just lost all of my charts.
Fortunately, mine is still running. I have two
Yeah,
meetings.
no, mine are. I'll come back here. There's operator error.
Ah,
Happens. Okay, let's try it again. All right, so last night on the Dow, consider being long, 23,465. 23,465. Come on. All right, that's pretty close. 23,465. So again, you can see that we had two triggers. $23,465. All right, so we have two triggers on the Dow. Boy, this thing's not cooperating. Yeah. It's because we've got a lot of volume surging through right now, I guess. So from 465, we made it up to 6,000. So that's 135 points, give or take. Lex, 135 times 5.
135 times 5 is 675.
Okay, so that's a $675 per contract move. Now, let me look at zones. Again, with the Dow, we're well above the highest weekly trading zone. We get back below the trigger, off we go again, and same as with the ES, we're approaching the high of the session right here. So from 465, the swing high was 873. So it's basically a 400-point move at $5 a point, $2,000 per contract traded. On the Russell, the trigger was 1204. Looks like we only got one trigger on the Russell. So from 1204 up to 1250. So that's a 46-point move. Alexa, 46 times 50.
46 times 50 is 2,300.
Okay, so that's a $2,300 per contract move on the Russell. And we still don't have an exit signal there. On the Dow, we don't have an exit signal there as of yet. Again, if this candle suddenly reversed and closed red below the step line, that would be the exit signal. So even though the market paused for a few hours, we never pulled back to the BBC. We just did the sideways walk. And now the market is possibly on the verge of printing new highs on the session. On the NQ, last night's trigger was 82.68. 82.68. So that's right here. $82.50, 82. Okay, so there's 82.68. The swing high on this first trigger only went to 73. So that's just a 5-point move. At 20 bucks a point, still $100, but this is a little better here. This one put in a swing high at 83.26. So that's about 60 points at $20 a point, $1,200 per contract. And this time we pulled back to the BBC where we found good support. That's what we expect. And now we're looking at trigger number 3. And let me check on Dr. Tom. See if he's logged in yet.
You usually hear him coming in when he's coming in.
Does he have a hot mic when he comes in? Oh, there he is.
Yeah. Okay.
Hey, Dr. Tom, welcome to the show. Okay, he must be getting set up. He just logged in.
Yeah.
All right, so we covered the S&P, the Dow, the Russell, the NQ. Let's look at Crude.
There he is. There he is. Now he's got a hot mic.
That's you, Dr. Tom? Okay, question from the chat box. Joe asked, do you go ahead and enter the trade ahead of the trigger? Whichever one executes, then put in your sell target? Well, Joe, you can do a couple different things. As price is approaching, you can simply go long at the trigger price. You can drop down to a smaller time frame.
Yes.
That you, Dr. Tom?
Yes, I'm here now.
Welcome to the show.
Switch headsets.
Oh, well, you sound good.
My battery died.
Ooh.
Well, thank you. You're looking good.
Thanks.
You definitely have a face for radio.
Oh, my goodness, you're too kind. Joe, after we finish talking to Dr. Tom, if you'll ask that question again so that I don't forget, I'll go into a little bit more detail and show you exactly how we look at that and how we use smaller time frames. So, Dr. Tom, how's your week been in your world?
Well, it's been very busy. There's a lot of desperation to buy gold, so I've never had a busier week. And
that's a good thing, right?
Yeah, well, 85 or 90% of all the gold dealers in the country, the smaller ones, are totally out of gold. And fortunately, when gold was at its low, I just kind of felt led to buy some. So I put every penny my company, Gold and Art, had into it, and every penny I had personally into it. And I'm so glad because I'm able to help a lot of people out that wouldn't have been able to buy gold otherwise.
It's a cool gold shortage. Let's see what kind of headlines we got on that topic. Is there a shortage of physical gold and silver? That's from Kitco. I know you're familiar with those folks.
Sure.
Talk of gold price manipulation is proving to be not so crazy.
Look at the one, go back one, where it says precious metals go down some.
This one?
The one from the Wall Street Journal. I trust them more than a lot of people. Gold shortage, get that one. That's pretty amazing. There's three things you have to have a gold supply. You have to have miners. Well, they're shutting down a lot of the miners.
Okay.
A lot of the mines are shutting themselves down for safety, you know, because the workers work close to each other. And then you take what's called the doré, the rough gold that they bring up out of the ground. It has a lot of twigs and rocks in it, you know, and put in little cakes, and they ship that off to the refinery, and they make it pure. And of course, a lot of the refineries are closed down.
Well, James and
But the worst,
chat box, I'm sorry, just mentioned that South Africa is finding it hard to get planes to London for smelting, and you know that's just contributing to the issue. Please go ahead.
yeah, and they should have built their own refineries long ago. I mean, they were the first real gold bullion suppliers in the world. But anyway, the Royal Canadian Mint, which is the most popular bullion coin, it's the Canadian Maple Leaf, they've shut down operations totally. So you got mines shutting down, you got refineries shutting down, you got mints shutting down. I think the next will probably be the British Mint, because we're allowed to have crowds of no more than 10 people. In England, it's no more than 2 people.
Oh, really?
Okay. So there's a worldwide shortage, plus the stock market crashing has called a worldwide demand. And I mean, I don't work on the weekends, but I took calls all week long. I was on the phone 16, 18 hours a day, except for when we watch church online. You work on Sundays for sure, but there's so many people who are desperate. It's actually a gold buying panic. There's an article about Switzerland where there was in gold. Okay, and there's lots of different definitions of what a panic is, right? But my definition is, if something is such short supply that people get in fistfights over it, then that's a real panic.
Yeah.
And we've all seen the pictures of the old ladies in Walmart and Costco and Sam's punching each other's lights out over a bag of toilet paper.
I haven't seen those, but I don't doubt it.
You got to look. It's funny as heck. And then the other thing is, I talk to gold dealers all over the world, and they tell me that they're as long as they had gold, they had lines out the door and sometimes around the block. People waiting in line to get into the store to buy whatever they could buy. And occasionally, if somebody tried to cut the line or something, they practically beat this one guy to death. They punched him out so bad and were kicking him. And I mean, that's panic. It's ridiculous, but that's definitely panic buying. But I'm one of the few dealers that can actually still get gold. One of my wholesalers, when I called to ask him, so, what have you got for me? What can I buy? Normally I have like 100 choices of different types of gold. He said ROFL. I said, what is that? So I'm rolling on the floor laughing. So he doesn't have any more. My one supplier, he's kind of set aside some gold for me because he knows I help a lot of small people. And, he's helping millionaires selling gold at wholesale, but he knows that I have a heart for regular people. But it's just a crazy situation right now. That the best economists and the people who called gold right for the last since 1980,
Mm-hmm.
are calling for $3,000 gold by the end of this year or the first of next year, and 5,000 within a short period of time, which could be a year, year and a half, 2 years. That's without a crash. If we have a crash, gold will go to $15,000 to $20,000 in a heartbeat, and all the people that have stacked up $100 bills and hidden one in the mattress, they'll be able to use them for toilet paper. Because in a real crash, nobody will accept the paper money. I was just talking to an old buddy of mine, my best man at my wedding, when he was trying to get on the line. He said, well, I know I need you to get some gold, but, where would I go to sell it? I said, Dave, you're not stupid. He's like me, he's a Marine. They always make all these jokes about the dumb Marines, but, we're the smartest guys of any of the military services. We're the ones that win the wars. I said, Dave, that's a dumb statement, man. I could talk to him like that.
Mm-hmm.
We've been friends for 40 years. I said, are you dumb enough to sell an ounce of gold for worthless paper money, even if somebody offered you $1 million worth of paper money, when the dollar has crashed, would you sell it to somebody? He said, well, no, of course not. I said, then you're not going to be going down to a store to sell your gold. You're going to be spending your gold. I've talked about the 10-10-10 financial survival plan now. And a lot of people have been thinking about it for years, and are calling me up now and said, oh, I wish I'd listened to you, 10 years ago, 5 years ago, 3 years ago.
Right.
One lady actually drove all the way across the state. She's already got a lot of gold, but she wanted to buy some more and didn't want to wait for it to be shipped. She drove all the way across the state. And while she was here, she said, Tom, I want to thank you again for telling me to get out of the stock market a year ago. I says, yeah, I can see that. She says, yeah, if I hadn't, I'd be down to $350,000 right now. So I've even got people from back 4 years ago when I was a stockbroker calling me up and thanking me for getting them into gold. And I didn't really know anything about gold back then. All I knew about was bullion.
Mm-hmm.
I knew nothing about investment grade gold. And I didn't know about gold protecting you against inflation, and being a safe haven in crazy times like this. I just instinctively knew that gold was a good thing. So, first time I ever.
Well, number one, God created it. Number two, He shut down production after 7 days, locked it up in the belly of the earth, and there's not going to be any more, unless they find some on the moon. And
That's a good point. I have to remember that. He shut down production after 7 days. I'm writing that down right now. Thank you. Can I use that?
Oh, you bet.
But there's a couple of other factors that are involved in all this. In addition to the shortage of gold, the online sellers of gold, be extremely careful, folks. People are going online and they're being told, send me $50,000, and as soon as I get the gold, I'll ship it to you. But oh, by the way, it could take 4 months. I don't think so. Number two, 5 of the biggest gold bullion dealers online, all of them described as respected and trusted dealers, have gone bankrupt. The latest one was Bullion Direct.
Really? What about some of these names
company
that we're seeing? I just Googled buying gold online, and there's SBC Gold, there's Rosalind Capital. Anyone that watches Fox is familiar with Rosalind. JM Bullion, First National Bullion, Apmex. Are any of those that you're personally familiar with?
Yeah, I'm familiar with all of them.
Okay.
I'm just saying this is not the time to be buying gold online.
No, I understand. Well, yeah, look at the headline screaming at you. Don't buy gold online.
You want to have the physical stuff in your hand. And particularly, please, folks, don't buy gold and they say, well, we'll keep it safe for you in our vault.
Yeah.
Okay.
Yeah, that's just
because that's what happened with Bullion Direct. A lot of people stored their gold there. Then they had millions of dollars people that sent them that they hadn't shipped the gold, and they just embezzled it. They took it out, hid it, and they said, "Oh, we're bankrupt." Well, now the guy who ran Bullion Direct is facing 50 years in prison because he financially ruined so many people.
Is this it? Austin's Bullion Direct? Is this it?
That's Austin's Bullion Direct. I don't know if he's the same guy. I had read, yeah, it's the same guy, Charles McAllister. I had read that he was facing 50 years but hadn't been sentenced yet. So I guess they went ahead and sentenced him and he got 10 years. So he's lucky because he's probably got a lot of that gold hidden, and 10 years from now he'll come out and have a good life, you know. But basically, in effect, we're out of gold. As I said, I'm one of the few people in the country that has gold.
What sort of premium, or what sort of premium? It says here there's no gold. There's roughly a 10% premium to purchase physical gold for delivery. Usually it's like 2%. I can buy a 1 ounce American Eagle for $1,800. Is that?
Let me give you an example.
Is that what you're seeing? Okay.
It's possible for gold to go down and for the cost to buy it to go up. Okay.
Because of the premium?
Because of the premium, right? The price is lower, but the premium over the spot price can increase. So a couple of weeks before this happened, I was buying American Eagles at 2% over. Next time I went to buy some, 2 weeks later, it was 12%. Okay, huge difference. And now American Eagles that I used to buy at a premium of about, $50, $40, depending on the market, they want $135 over spot to buy gold Eagles. So part of the problem with the American coins, the Eagles and the Buffaloes, as opposed to say like the Canadian coins, is Canada mints coins more as a service for their people. The government mint, the U.S. government mint, looks at it as a profit center. And so before the dealers ever get it, there's already a big premium added to it. And then the wholesaler has to add his premium. And then the retail guy has to make some money to pay for his rent. And I'm fortunate, I don't have a physical store. I do everything by phone and email and so on.
Right.
So, and I bought gold when it was cheap. I mean, I got some really good deals because I bought it when it was much lower, and I just stocked up. And it was a little scary because, you buy a whole lot of gold, and then if gold went down more, you could lose a lot of money.
Sure.
But I didn't see any scenario where gold could go down any significant amount. What's support at about $1,450 right now?
I'm sorry. What's gold at right now?
Support.
Well, here, let me bring up a chart. Yeah, 1450. This is
okay.
This is a daily chart that I have up right now.
So I bought
actually,
just a little over
there's support at 1570. This area right here should definitely hold. Let me go to a different chart. Let me go to this chart. So here, futures are at 1751.20 right now. Let me just throw this on a daily.
And gold itself is around 1640. So futures, obviously, they're projecting much higher. But like I say, almost everybody I know is calling for gold at 3,000. Maybe by the end of the year, certainly by first quarter next year.
Yeah, so right here on this futures chart, 1600, we're trading 1751 right now, but definitely good support right in this. You can see it here.
I can see it here. Yeah.
$1,600. So even on a pullback, I would expect 16 to hold. And there's no indication from this chart that there's a pullback coming anytime soon. And this
No,
points
it
to
was like
higher
John was
prices.
saying the other day. I mean, what would cause it to go down? I mean, the debt's not going to go down. The debt's going to keep going up. Inflation's not going to go down. It's going to keep. In fact, why don't you give me the slides and I'll show you a couple of things.
Okay. Let me just, okay, on using Fibonacci price extensions, the next Fibonacci price target overhead, and this is just based on math. This has nothing to do with supply and demand or anything else. Next price target overhead would be $1,812, $1,800, $1,812.
Fibonacci, isn't that an Italian restaurant?
It is, yeah.
Yeah, okay. I thought so. Good pizza there from what I hear.
Well, actually, the Parmesan, the eggplant Parmesan, that's the way you want to go. Hey, I wanted to ask you, so this coin, I know you're a gold guy, not a silver guy, but this coin right here that they're showing, the 1 ounce American Silver Eagle, they've got it pegged at $32, but it's the one in the case, with the barcode and everything. So one of these coins, without being in the little, what do you call those again? Capsule?
Slabs. Can you click the little thing into right and make it bigger?
Yeah.
The coin.
It's coming.
Now let me show you one of the biggest scams that's out there.
Okay.
Okay.
Mm-hmm.
And just leave it right there.
Okay.
2020 American Eagle denominated $1.
Mm-hmm.
And then you see MS69.
Mm-hmm.
Okay. Now, people that understand rare coins know that anything is MS60, which means uncirculated, is good. It means basically not touched by human hands.
Mm-hmm.
But there's different grades of uncirculated because some of them can have little tiny scratches or whatever, But 69 or 70, you hardly ever see in a coin that's been out there.
Okay.
But when they buy directly from the mint, like this guy, I think it is this Blanchard here.
I'm sorry?
I thought I saw that Blanchard was the one that was selling it.
I don't know. It says Modern Coin Mart up at the top.
Okay. Well, there's a lot of them that do this. It's a very profitable scam. You buy brand new coins. Nobody ever touches them unless they're wearing gloves.
Mm-hmm.
And they get them slabbed. Well, of course, if they're brand new from the mint, they're going to grade 69 or 70. All right.
All right.
Now, what is silver running right now? Let me look real quick.
Yeah. Let's take a peek. Silver, SILVER.
Okay, 1487 down 4 cents.
I got
All right.
1549. 15.
I'm on Kitco.
Okay.
Oh wait.
What price,
let me
what price did
refresh.
you
I'm
have
sorry.
again?
Yeah, you're right. 1552.
Okay.
That's the thing about Kitco. They don't update automatically. You have to click
Got to
refresh.
refresh the page. Okay.
Sometimes I forget. Okay, so 1552. In this coin, they're wanting how much for it? 20 something.
No, $32. I believe
good
was
Lord.
the case. Yeah, 3203.
All right, and it's only worth spot, plus
Half
maybe a
that.
maximum of 5% over spot.
Okay.
Because it's just a bullion coin.
Sure.
That's all it is.
Right.
They make millions and millions of them.
Mm-hmm.
It's in no way rare, but the fact that let's say you go to buy a car and you get a brand new car that has 0 miles on the odometer, and they say, "Well, I can let you have this car, but I'm going to charge you an extra $10,000 because it doesn't have any miles on it." Well, a new car is not supposed to have miles on it.
Right.
Okay.
Right.
So these guys, they do this. They do it with gold coins too, and they make it appear as if this coin is a rare coin, because most rare coins are put in slabs like this.
I see.
And then they show a very high grade on it, and you say, "Oh wow, man, 69. This is a really special coin." It's no more special than the other 5 million that they made that came straight from the mint that would also grade 69 or 70 in some cases. So Please don't be fooled by that, guys.
So I assume a person could buy these slabs wholesale, and you could slab up your own coins if you wanted to. Is that right?
Well,
how does that work?
Technically, you could. Technically, you could, but
you're not going to have that
wouldn't be-
numismatic guarantee corporation. You're not going to have that seal.
exactly.
Yeah.
And people will discount coins, like say US $20 coins, if they're PCGS, the Professional Coin Grading Service, or NGC, the Numismatic Guarantee Corporation. Then they'll give you full price on them. If they're graded by ANEX or ICG or any of the other little, what I call mom and pop shops, they will discount them. And if you just made up your own brand, nobody would even know what that was, and you would get a heavy discount because they don't know if it's even genuine. Once you put it in a slab, you can't tell if that's silver or copper plated with silver. All right, so you have to trust the company that slabbed it, and so that's their guarantee. If they say it's genuine and that it's a certain grade, if it turns out not to be genuine, and this is important because we have coins that people buy for $20,000-$30,000. You want to know if it's genuine.
Right.
If it's not and they've graded it genuine, they will actually buy it back from you at full price. So that's why people go to the name brands. So anyway,
so
be careful.
is this number $32? Are you suggesting that perhaps that's what these people have done, or would that be considered the going rate right now for one of these coins? Or what would be the value of one that's not slabbed up?
Like you say, maybe 5% over spot.
Okay. Gotcha.
Okay. So this is just a big scam. It's like, have you ever heard of roosters?
Well, yeah.
It's a French coin.
No.
Okay.
No.
All right. I like Glenn Beck. He's a good guy. He's really good at teaching things that people don't know about, But he really hurt himself when he allowed a certain company, I'm not going to mention the name because I don't want to get sued, but he allowed a certain company to advertise, and he says, I buy all my gold from blah, 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 such and such company.
Right.
Well, the company's a scam company. There's a coin called 100 francs and another coin called a 50 franc or 20 francs.
Yeah.
You can buy them all day long from the mid 1800s. So it's in a slabs that indicates that it's rare. It's from the mid 1800s, so 80 years old. And they sold tons of these 20 franc roosters. And they were making 40% on them, which is unconscionable. Okay. Why? It's because the 100 francs would be like, people that have some money, usually carry around $100 bills in their pocket. And that don't have any money, the biggest thing they have maybe is a 20. All right.
Okay.
So in the 1800s, the well-to-do people had 100 francs coins.
Okay.
And that was worth a lot of money. And so there were very few of them minted. So those are truly rare coins. And we're buying them like 10 cents on the dollar right now compared to the equivalent US coin. But the people that here today would carry around a $20 bill, they would have carried around a 20 franc coin. So they made like 25 million of them. So that's not rare at all. They'll never be rare.
Right.
But they're selling them. People are equating old with rare. Whereas the 100 francs, there's only 983,000 of them ever created in 59 years. So those are truly rare coins. But yet, if you get a US coin that is as rare as 100 francs, it'll sell for 10 times more, sometimes 15, 20 times more, because people here are more used to US coins and because they're in these slabs. But most of the US coins are not rare. Most of the coins that get slabbed are not rare at all because we make millions of them. Another good example is the British coins. We do a lot of business with British coins, like the £5,
Right.
because they sell them for only a little bit over spot. The first ones that were made for Queen Elizabeth II sold for just a few $100s over spot, and they're a huge coin. They're an ounce and a third, as opposed to do a search for Elizabeth II £5 gold.
Elizabeth.
Not Elizabeth
Second.
Warren. We can't stand to talk about her.
Elizabeth.
£5.
£5. I better spell it right. Oh, there you go. £5 coin. Okay.
Right. Okay. Now, go to the British Mint, because they have several different ones. Let's see how Bradford. They're really big into collectibles, and they
You want me to click on this one?
really overpriced collectibles, right?
Click this one?
See that? Yeah. No, don't waste your time on it. It's
Oh,
a gold-plated coin, and they're selling for $50. It's not even worth $10. Okay.
Oh, it's
we
gold.
want to go.
Oh, this is gold plated. Oh, yeah, right there it
Yeah.
says it.
So this is
Plated
all the
in
price.
20 But people look at it and they think it's a gold coin. Is that?
Yeah.
That's your point. Okay.
Yeah. So go back to the list and let's see if we can find a £5 gold coin. You have to add gold in your search. Okay. Now get it. And let's find something from the British Mint.
Mint.
Going down a little farther.
British Mint.
Because we want the Royal Mint.
Oh, is it called the Royal? I think I saw Royal. Did I? No. Oh, here, let me just add that into the search. Royal Mint?
Yeah.
Royal Mint. There we go. Patriotic Mint. Okay, here's the Royal Mint. .com.
Okay.
Gold coins.
All right. So what we're looking for is a £5 coin.
Is this the? This isn't. That's not it, is it?
That's an Elizabeth II. That's a sovereign. So that's about a fifth the size of a £5 coin. Okay. Quarter ounce. Going down. They commemorate everything over there. But what I like about it is they make limited numbers. It'll be in a little box like you just saw there.
Here, let me. They got a search up here.
£5 gold.
£5 gold.
Okay.
A little box. That no.
Yeah. Click the Battle of Waterloo there.
Okay.
That's 23.75 pounds. Okay.
Mm-hmm.
So that's not much over spot, because remember, this is an ounce and a third coin. Now, the first coins that they made for Queen Elizabeth II were in 1953. And of course, they made them in limited numbers, and you can't buy one for less than $1 million a piece today. But they sold back then like this for a few $100s over spot. So the more modern ones, the ones from 1980 on, we can get for between like $2,500 and some of the really rare ones, maybe $10,000. Okay. But the thing is, the British Mint, you got to love them. They don't produce anything that's 7,500 or more. Well, 5,000 or less is a rare coin. And so they very seldom produce things over 5,000. Now, here's a little funny quirk. Who's the most despised royal of all time? It's good old Prince Charles, right?
I was going to say, I was going to suggest
heir to the
Charles.
throne.
Yeah.
Yeah. England hated him for divorcing Diane and marrying that horse-faced woman. And in the old times, a divorced heir would just be taken out of the line of succession. But now, things have changed. So anyway, Parliament says you can't make more than 7,500. The Royal Mint is left to decide whether to make 1 or 7,500, but they do it based on what they think will sell. So with the Diana coins commemoratives, it's called the Diana Memory Coin, came out, they made 7,500 of them because she was the most popular royal ever. You imagine the most despised and the most popular were married to each other. So they made 7,500.
Opposites attract, they say.
Yeah. Now the Charles coin, when they initially made them, they only made 200 out of the allowed 7,500 because they didn't think they would sell. And it took a long time, it took months and months, and finally they did sell them all. And then they made a few hundred more. I think they made a total of 388. So, which would you expect to be worth more? I mean,
Well,
most
the one,
people would.
yeah, the one that there's the fewest of.
Yeah, that's logical. But a lot of people are emotional. They say, I don't want a Charles coin. He's a scumbag. I want a Diana coin.
Mm-hmm.
So her coins are not even rare. And the Charles coin is extremely rare. Any coin is under 1,000. That's very, very, very rare. And there's less than 1,000 of these ever made.
Mm-hmm.
So it's actually bringing more money than the Diana coin. So it's just a good illustration of what rarity is. But what I'd really like to talk about today is the panic buying of gold that's going on around the world. And so if you could throw
I'll
me...
send you the, yeah, you asked me that once and I got sidetracked. Okay.
You like searching around the internet, don't
There you go.
you? Okay.
It's all yours.
Okay. The China virus triggers stock crash and panic buying of gold. And by the way, I just put up that there for fun. That is a real roll of gold toilet paper. It's actually made of gold. I don't think anybody would ever want to wipe anything with it. But you could buy that for only $3.4 million. And it's delivered personally along with a bottle of Dom Perignon. Okay.
Lifestyles of the rich and famous. My.
You betcha. But if you look at the background here, off to the right here, you see that's actual electron microscopic picture of a virus.
Mm-hmm.
That's what they look like. And over to the left, of course, stacks of gold coins. What's the relationship? All right. Well, let's move along. Okay. First of all, we interrupt our regular scheduled program to give you a red alert. The UN has proposed a 10% world COVID-19 tax, as they call it. Okay. And this is something I just found out in the last few days. We just learned the UN has detailed plans in a 26-page proposal to tax every person and business in the world 10% of their income to end the pandemic. Okay. The UN has tried for years to tax the world and failed. Mostly what they tried to do is said, let us tax everybody in the world and we'll end climate change. That didn't work, of course. But people are so frightened of this virus that they may be able to convince some world leaders to allow such a horrific tax, thinking that a coordinated world effort, I mean, that's the whole idea. Instead of every country doing their own thing, let's all get together and come under one world government and we will make all the decisions for you on how to end that. Even by the notoriously inefficient UN. I mean, The UN is less efficient than your local driver's license place. But if people are frightened enough, they might think it might work. And so they'll probably present it as a temporary measure. But when have we ever seen any governing body give up power once they had it? It just doesn't happen. So we've heard this quote many times, but this is appropriate. Those who would give up essential liberty to purchase a little temporary safety deserve neither liberty nor safety. And he's right. You know, if we allow the UN to become a world government, it's a world organization right now, but if we allow them to become a world government and have the power to tax, then we've lost everything. Okay, and now back to our regularly scheduled programming. Here's the president speaking to America on the economy. I'm speaking to you tonight to give you a report on the state of our nation's economy. I regret to say that we're in the worst economic mess since the Great Depression. A few days ago, I was presented with a report. I'd asked for a comprehensive audit, if you will, of our economic condition. You won't like it. I didn't like it. But we have to face the truth and then go to work to turn things around. And make no mistake about it, we can turn them around. The federal budget is out of control and we face runaway deficits. And of course, he goes on to say that deficits add to the national debt every year. And so the national debt is, according to Admiral Mullen, the former chairman of the Joint Chiefs of Staff, the national debt is the greatest threat to our national security. So, did you happen to hear that statement when Trump made it, Dwayne?
You mean what you just read?
Yes.
No, I don't think I did.
Yeah, did anybody online, does anybody remember the president making this depressing statement? Just type in yes or no.
No
Okay.
one seems to have.
Well, the reason is he didn't make it.
Ah,
Ronald Reagan said it. And he was talking about at that time a $900 billion debt. So 9/10 of a trillion.
that's pocket change.
Yeah. I mean, he was so upset. That's the main reason he ran for president, is to reduce the national debt, because it was crazy. It was insane to think that we would have a $900 billion debt. And he worked hard to reduce it.
Mm-hmm.
But because of debt, economies all around the world are crashing. But don't worry, government comes to rescue. The problem is when the government comes to the rescue, it gets control, doesn't it?
Yes, it does.
Okay. Now, what they're trying to do now is say, well, we're not going to let you go to work. And of course, they say it's for safety and all that kind of thing. And that's true. Okay. It's not safe right now to gather in large crowds and so on. But we are a very smart and creative country. We could figure out ways that people could work and still be safe.
Right.
But the Democrats want the country shut down. So right now, 90% of Americans are under house arrest. And unless you can work from home, then you're in trouble. If you're a ditch digger or a dishwasher or someone that works in manufacturing, can't happen. Again, just give one example. Let's say manufacturing.
Mm-hmm.
They could, instead of having an 8-hour shift every day, they could have 3 8-hour shifts and have people working at machines spaced at least 6 or 8 feet apart.
Right.
That's one creative thing that they could do. A lot of companies still refuse to allow people to work at home that could work at home. They're afraid that they'll just sit around and not work and get paid, so they won't let them do it with their software that they can use. They put in your computer, and they can tell when you logged in.
Oh, yeah.
And when you log out, but also they can tell if you're working, because if the keyboard isn't activated, at least every 10 minutes, they know that you're off watching a movie or something.
Right. Exactly.
But they don't want that. They want us dependent on the government. Right now, the average unemployment compensation is $436 a week. The government is adding $600 to that. So a lot of people will be making more money for not working than for working.
Well, that's a dangerous situation.
Yeah, and Governor Cuomo of New York
I mean, many
wants to add
people, I
another
think
600.
most people want to work, but not everybody.
That's true. That's true. Especially if they're smoking dope, it's a lot easier to kick back, because you don't want to drive when you're smoking dope.
Just past the 20s.
The $436 a week is based on an average of, I think, 60% of your income. The government is now going to add $600 a week to it, so way more than doubling it. And in New York, they're saying they're going to add another $600 to the 600, make it $1,200 plus for like $1,600 a week, right? And Cuomo says, "Oh, don't worry, because the federal government will pay us back this money if we spend it." So if a guy's making, $700 or $800 a week, and now suddenly he can make $1,600 a week for not working, it's just like the farmers that the government pays to not farm. How insane is that? You got land that can be productive, and because they want to control prices, they do it. More than anything else, the government wants to get everybody dependent on them. That's why the big push for the Obamacare, they want us to come to them for what they call health care. It's not health care, it's health insurance, but they want everybody to get it through the government. They want everybody to be paid by the government. Right now, half the people in this country are supported by the government one way or another. Either they're on, food stamps, or they're government employees, they're on welfare, or they're in the military. None of those, except the military, are a good use of money. Okay, the military, they keep us safe. Most government employees are lazy. You can't fire them. They can just do whatever they want to do, and because they have government jobs, they have this security, and you can't fire them. So government employees add nothing to the economy. People on welfare certainly add nothing to the economy. And even the military doesn't add to the economy. It's not productive use of money. But half the people in the country are being supported by the other half. The other half that pay taxes are actually supporting everything else. Well, they want to get that higher. And so I like this quote from Senator Everett Dirksen. He says, $1 billion here and $1 billion there, and pretty soon you're talking real money. He was a big believer in Ronald Reagan, obviously. So how much is $1 trillion? And we talked about this last week, so but I put it in the PowerPoint in case anybody missed it. It's a million millions. That's pretty big. But I loved your example, Dwayne. If you start counting right now and never stop to eat, sleep, or go to the bathroom, which of course is impossible, it would take you 39 years, I think you said, to count to $1 trillion. That's how big $1 trillion is. Now, remember how upset everyone was with Obama when he doubled our national debt from 10 trillion to 20 trillion in 8 years? That's over $1 trillion a year. He added more to the debt than all the presidents that preceded him together, and all the years that our country has existed, more than 200 years before he took office. And everybody was furious, even a lot of Democrats, because there are some conservative Democrats. Well, what we're looking at now, first of all, there were 2 bills passed quietly before this one big bill, the biggest bailout bill in human history, $2.6 trillion was announced and the president signed. He really didn't want to sign it because it had a lot of pork in it, but he did it because we needed to get money out to people that were really hurting. But hidden inside that is another 400 trillion for big business, okay? And as soon as they passed that, they started working on another $500 million, and they're promising 4, 5, 6 more bills coming. So the best Oh, I'm sorry, 31,000 years? Oh, gracious, I got to fix that. Okay. Matter of fact, I got to fix it right now. 31,000 years. I don't like it accurate. Okay, if we're going to be exact, 31,709. Thank you, sir.
Mm-hmm.
Okay, so let's save that. I thought 39 years was bad enough.
Yeah, I know, right? I mean, if you had just asked me, just in conversation, if I was going to guess, I would have probably said, let's see, no sleep, no bathroom, I don't know, probably at least a couple weeks,
Yeah, me too. I would never have imagined that it could be that huge. So $1 trillion is a horrible amount if it's debt. Now, if you got it in your checking account, it's a good amount, right?
Yeah.
But as debt, it's horrible. So the projections are that we're going to be spending $1 trillion, not a year, as Obama got criticized for, but per month. And this is not the government budget. This is over and above all the other government budget items. We're going to be spending $1 trillion a month on bailout. And that's going to be for at least the next year. It could go far beyond that.
Now, let me represent. As John in the audience pointed out, there are a lot of government employees who do wake up every day and go to work and do give an honest day's work for an honest day's wage. So let's not count them all out.
Well, absolutely true. It's just like union workers. Generally, I've had to work on union jobs before, and a lot of them, again, because they have the security, they just goof off most of the day. But there are some good, hardworking union people.
My pastor, for many years, he used to work, along with being a pastor, he worked for the city of Phoenix in the Parks and Recreation Department. And
right.
The other employees a lot of them would make fun of him because of how hard he worked. Because he felt that, this is my job and I want to do the best. The Bible teaches us, work as if you're working for the Lord, not for man. And so that's what he did. He showed up early, stayed late, whatever it took, and he got the job done. And sometimes the other fellows would lean on their shovels and poke fun at him, but he didn't let that stop him.
Well, yeah, I was working on a union job as a carpenter up in North Carolina, and we'd put the forms in for the footer and everything, and all we needed was to have the steel tied off. And only iron workers are allowed to tie off steel. All these stupid rules. I mean, the carpenters, how hard is it to tie off steel? You just put a wire wrap on it and twist it, boom, it's tied off. But all the iron workers were hiding out, So I just got tired of waiting, and I jumped down in the footer, I started tying off the steel. Next thing you go, there's this union iron worker coming at me, trying to hit me in the head with a piece of rebar. So I'm just against any kind of work system that rewards people for not working and prevents you from firing them if they don't. Now,
I think the world should be on commission. From teachers to policemen to doctors. Well, and I know in some jobs would be very difficult to calculate how that's supposed to work. I mean, you don't want policemen being overzealous, and you don't want doctors cooking up diseases you don't have. But as someone who spent most of his life earning a living based on commission, override,
right.
Very, very few instances in my life where I worked for someone else and drew a salary or an hourly paycheck. Everything I've ever done in my life has been performance-based.
And I think that's the word we're looking for, not commission necessarily for cops and teachers and whatever, but merit-based or performance-based. And there's ways to measure things like that. But back to the government workers, the main point I was trying to make is that the government produces nothing. No matter how much money you spend on government programs, it doesn't produce anything for the economy. It doesn't increase anything. Now, obviously, your viewer there is correct. There's a lot of hardworking government workers.
The first responders, in many cases are considered, those are government employees.
Yeah, and I used to be one. I was a cop, I was a firefighter, I was a paramedic. And I worked my butt off. 24 hours, sometimes I worked a 24-hour shift, and sometimes we'd be on the road for 24 hours. I'm just making a generalization. Let's say you work in a government office and you work hard and you get a lot done every day, and you watch the guy next to you doing practically nothing, and he's always going to the bathroom or the water fountain, standing around the water fountain.
For sure.
It is, because what incentive do I have to work hard if this jerk next to me gets paid the same as I do? What do they call it when you have the ultimate job security in government workers? What's that called, the word?
I don't know.
I know Michael knows. He knows everything.
But I do know that for some people have a mentality that I guess they grew up with. I don't know how they became, but it's it's how not how much can I do, but how little can I do and keep my job.
Right.
That becomes their job.
What
to
got us
figure
into
out
this discussion?
How little they can do and not get fired.
What's the minimum, right?
Yeah.
What got us into this discussion is talking about this bailout, and the fact that some people are going to end up getting paid more for not working, which will be the death of our economy. The bailout number 2 for the big businesses, and much more spending is being worked on. So that's my prediction, but it's not me. I'm not an economist. I'm looking at what the smartest people in the world are saying, that we're going to be spending $12 trillion in the next year, which means the national debt's going to increase to $35 trillion. So right now we're spending 43 cents of every dollar. It comes from borrowing. That's where we get the deficit. Add the projected spending to our current budget of $4.4 trillion, and now we have a $16 trillion budget. So we'll be borrowing 88 cents of every dollar. That is simply unsustainable. It can't go on. It's going to cause a crash. So, and that's just the U.S. Here's the rest of the world sinking because they're spending trillions more that they don't have. So where's the beef? Where's the money going to come from? The answer is it doesn't exist. It's just going to be created by a bunch of computer nerds, and they just program it, and boom, the money magically appears. So severe inflation is inevitable. We're already seeing it. Can you imagine a case of Fiji water, $43? That's an actual photo from a Costco.
The first time I saw water for sale, this has been a number of years ago. I think my wife and I, we were living in Portland, Oregon at the time. The company I worked for had transferred me there to open a sales office, and I pulled up to a convenience store, and there was a machine out front where you could buy a gallon of water for, I think it's a quarter a gallon now. I don't recall what it was back then. This would have been in the 80s, mid to late 80s, but I was just, I found it comical. Who in the world is going to pay for water?
It's going to buy water.
Free.
Yeah.
It comes out of you turn on the faucet and out it comes. Yes, of course you pay a water bill, but you just never thought of it that way. I never thought of it that way. And now
I've always thought it's the stupidest idea in the world, but listen, I need to kind of pedal fast to get to the main point here.
Go ahead.
Okay. The inevitable equation is when you print money, you get inflation.
Yep.
When you have inflation, you increase the national debt. And when you increase the national debt, gold prices go higher and higher. So we're looking at $3,000 to $5,000 gold without a crash. With a crash, it's going to be $15,000 and up. So we've been getting warned. Okay, lots and lots of warnings. The stock market has been overvalued by any measure for at least the last year and a half. I do business with a lot of millionaires and billionaires, and they've been quietly selling their stocks and bonds and buying gold. I know because they call me and buy the gold for me. And I ask them, what are you doing? And that's what they're doing. They don't want to just pull all their money out quickly. They want to, they don't want to cause a crash themselves, but they want to get gold. So stocks have always been a roller coaster, but like you've heard me say before, there's never been a roller coaster that goes straight up. And this crash was inevitable, and very volatile. So the stock market party's over. Eventually, it will probably someday get to 30,000, but I believe it'll get to 15,000 before it ever gets back to 30. So who says so? Well, basically everybody who has brains. Peter Schiff, who everybody knows, he said, this is way back in October, he was warning people. If the first trading day of the fourth quarter was a sign of things to come, the bulls on Wall Street are looking for a rough end to the year. In fact, he said the party is over and you don't want to be the last one to leave. There's a lot of people that wish they'd gotten out of the stock market before it went down 35%. There's Marcus Heitkofer. Not a lot of people have not heard of him, but he has a very successful hedge fund. And he predicted the stock market actual crash, not just that it was going to go down, but it was going to crash severely 2 weeks before it happened. And all the talking heads on the financial channels were still saying, oh, don't worry about it. This virus is serious, but it's not going to hurt our economy. And then Dr. Tom Barrett. I've been predicting this crash for a year and a half. In 2006, I predicted the panic of 2008. The tech crash of 2000, I predicted it publicly. I had a newsletter in 1999. And going back to Black Monday, which is a long time ago in 87, October 19th, 1987, a year ahead of time, I predicted. It's not that hard to see a crash coming. I'm not going to go into details about how, but most of you on this line know how to do it. But this is just the beginning. Remember when everybody was so excited and the Dow got to 10,000? They said, oh, well, it's all going to be green from here on. Well, if you had any sense, you knew that the stock market couldn't just keep going up and up and up. And I disagree with the people that say that the virus is causing the crash. Okay, the crash was going to happen no matter what. When the stock market gets weak, gets volatile, gets shaky like it's been for the last year and a half, then that means it's looking for an excuse. And it could have been anything. It could have been a tsunami, could have been a terrorist attack in Seattle, whatever. In this case, it was looking for a trigger, and it found it in the virus. But there was another trigger, and that's this war, oil war between Saudi Arabia and Russia, who are not friends of ours, of course. Mm-hmm. We become energy independent for the first time in decades, and now they start this gas war trying to drive the price of oil down to $20. Well, our main producers of oil in the United States are shale oil drillers, and they need oil to be at 70 to be able to make money. So we have two triggers that have made the economy, or made the stock market go down. The one that gets the most attention is because the individual investors pay more attention to it, is the virus thing. But the institutional investors, who make up 80 to 90% of the stock buying, they're more concerned about this one. So Dow's had record drops. We've had trading halts. Banks are closing, and the stock
we're having the best week since 1938.
Yeah. I know.
Just
Don't
how
worry.
Crazy
Be happy.
It all is.
Yeah. The brokers always say stocks are going to bounce right back. When people tried to get out in 2007, their brokers argued and said, look, I know better, blah, blah, blah. And they talked them into staying, and they lost 40 to 50%. So, as I said, astute investors, since gold started rising from 1,200, have been selling stocks and buying gold, and it hit almost 1,700. It's pulled back some, but remember what I said at the beginning. I was fortunate. I bought gold at around 1480. So I've got really good deals, and I have gold. That's the main message I want to get across today, because most people, when they try to buy gold, they're calling the gold stores or go into them. They're closed. We're going to go back to what money has always been, which is precious metals, for 6,000 years. It's going to happen. No nation has ever been able to escape when they do huge overspending like we're doing. There's huge demand.
Our economy is the longest running in history. What we're experiencing right now, and I don't mean just what's happened since Trump took office. I mean the history of America from 1776 up till now. Most empires fail after what, about 200 years?
That's what I heard. Yeah. And most paper monies fail after 37 years. That's the average.
Okay.
The reason ours has lasted longer is because we're the world reserve currency. But if we lose that status, and a lot of very smart people are saying that's going to happen, then it's going to make a huge impact. But anyway, there's a huge demand for physical gold. So here's my message to you. We stocked up before the gold run up. We have great deals. I don't usually like advertise like this on our webinars or on Dwayne's show. I just like to teach, but people around the country are desperate to find some place where they can get gold. And so I don't know if I have my phone number on. Yes, I do. There's my phone number. That's a direct line to me. Call me or go to CFRNgold.com. That's actually better. And let me know the best time to call you. Because since I've been on this show, I've probably gotten 12 phone calls from people that want to buy gold. I've got gold now. I may be out in a week. It may last for 2 weeks. I haven't started rationing yet. A lot of dealers have done that, and they still ran out. So eventually I'm going to route no matter what happens. But I want to help as many people as I can. And if you want to protect your family, then you need precious metals. So go to CFRNgold.com. Save us all some time. Read the Gold Education Starter Package before you call me. It'll be sent to you. And then I can just answer any questions you've got, and we can save time because it's getting harder and harder even to ship gold. A lot of the post offices are shut down. People wanting to wire money are finding out their banks have shut down. The only way they can get in the lobby and send a wire is to call and make an appointment, and they might be able to get in 2 days. So everything about gold is getting harder. The mines are stopping to produce. The refineries aren't refining. The mints aren't making any more. So a big drop in supply, a huge increase in demand, and now difficulties in shipping, and even difficulties for people trying to send money to buy the gold. So don't delay. If you feel like the Lord's telling you that you need to get some gold, I've done it now before there isn't any gold. Okay.
All right, Dr. Tom.
Lord bless everybody. Make sure you keep safe. Take your coronavirus vaccine every day. Psalm 91. Okay?
Gotcha.
God bless.
Thanks so much. Have a great weekend.
You too.
All right. Okay, guys, back to the chart. Here's gold right now on a daily. Let's put it on a 30-minute. And we'll take the fibs off for now. Okay. All right, there's gold. And after this nice run up here on the 6th, consolidated for a couple sessions on the 7th and the 8th. And then today, a bullish cross, price pulls away, price pulls back, leg, we put in a slightly higher high. Now we're pulling back again, which is what we anticipate. And when price connects, we expect it to hold, simply because it holds more often than it doesn't. Then that creates an opportunity for us to be long, back up to challenge the high. When you hear me say on the logic alerts as an example, the criteria for posting an alert is simply whenever opportunity presents itself. So here's an example of opportunity presenting itself. Here's an example of us waiting for opportunity to present itself. Now, is there opportunity at hand right now? There is. It's counter trend opportunity. In other words, we all know the trend is up in gold. You can see it on the chart. And as I said, we're waiting for the pullback so that we can initiate a long position in gold. Okay. Well, that being the case, doesn't gold have to pass through this little area here to meet up with the BBC so that we can see if it's going to hold or not, and if it does, initiate a long position? Yes, yes, and yes. However, we don't put the counter trend opportunities in the alert channel. Why? They simply don't have the same high probability nature as a trend trade. In other words, this thing might pull back, halfway. Buyers come in early, drive it up. What I do in many cases is in the discussion group, and more often here of late, I will post the counter trend opportunities in the discussion group, but I just don't put them in the official alert channel. So the counter trend opportunity right now is basically 1730 down to 1727. So that would be price coming down through this area to get to the BBC so that we can then see if it's going to hold, so that we could then potentially have a window of opportunity. Like that. In fact, once price pulls down here, depending upon how long it takes, how many candles are involved, we will potentially have two windows of opportunity on the upside, and those two based upon the momentum. If you've got strong bullish momentum, wind at your back, then these two could just meld into one move to the upside. So currently the BBC is at 1725, and the swing high is way up above 1750. So there's, once price completes its pullback, And again, we don't know if it's going to pull all the way back to the BBC to the tick, like over here. It may or may not. That's why it's not as high probability, okay? But let's say it does, okay? Then we have potentially a 25-point opportunity to the upside. 3 points down to the BBC, and then 25 points up to challenge the high. Gold pays $100 a point, so on a pullback to the BBC that does go all the way back to challenge the high, it's about a $2,500 per contract move. Now, there was a question earlier about the triggers, and I'm going to get to that in 1 second. Let me drag this back up. You grab a screenshot if you want to. I'm going to pause for about 2 minutes, and then I'll be right back and we'll finish this up. Okay, and we're back. All right, for gold alongside last night's Concierge Trade Alert, 1689. $16.89 was right there. Okay. Okay. So from 1689 to 1700, well, that would be 11 points. And then there's the other 50 we talked about. So this is roughly a 60-point move that we've had so far. 60-point move at $100 per point. So that's a $6,000 per contract move. Anyone that's earned the right to trade 10 contracts, it's a $60,000 move. Is there sufficient volume to support someone trading in that size? Yeah, with gold and crude, you don't, S&P, you never have to worry. There's sufficient volume for you. To give you an example, the current 30-minute candle, there's 16, that's going to click to 17. So 17 minutes into this 30-minute candle, we've traded 3,155 contracts. That's the green number here. At the Globex Open, or prior to the Wall Street Open this morning, there was a spike in gold at 8:30 a.m. Eastern. During that 30-minute period, we traded 20,000 contracts. So liquidity is not the issue. The issue is that you earn the right to trade more than one contract. In fact, you need to earn the right to even go live for your own protection. Throwing money at the market, hoping something will stick, it's just never a good idea. So whatever methodology or strategy that you're learning or using, so important that you first become consistently profitable in sim before you go live. And people are going to tell you, there's always going to be some guy in the crowd that goes, "Ah, yeah, well, that doesn't even make sense because it's not real." Well, the prices are real. The data is real time. Everything about it is real except, and this is a big but, or a big except you don't have real money on the line. Okay? And that can mess with your thinking. So the idea is that in sim, you get down the methodology, the strategy, everything that you're going to use to put on and take off trades. You can't simulate that emotional pressure that you're going to feel. But you'll be in a better position to deal with it if you don't have to worry about the other stuff, which is the trade setup, the methodology, the strategy, the indicators. You got to attack these things one at a time. Like, how do you eat an elephant? I think it goes one bite at a time. Okay. So you get consistently profitable, and with us, that means 10 consecutive days in a row where you reach your goal in 10 trades or less. At that point, our blueprint gives you the green light to go live with one contract. And then the idea is to stay with the one contract until you increase your account balance by $2,000. Once you do that, now you can add a second contract, and you're adding that second contract with profit you earned in the market. That's a big day. You should be dancing in the street because you've already accomplished something that many traders never will. You've taken a definable edge, you've deployed it, you've turned it into profit. Now you're building your business by going to 2 contracts. Our blueprint then puts you on a calendar-based system. You'll know what day on the calendar you'll be adding your 3rd contract, your 4th contract, your 5th contract, unless things go south on you. And when that happens, the course of action is built into the blueprint. 2 days, back to back, where you don't reach your goal in 10 trades or less. You come out of the live market, you go back into the simulator, you book a mentoring session with myself, with Michael, both of us if you want to. We walk through those trades with you using a GoToMeeting environment, so we're all looking at the same chart. We walk through the trades, troubleshoot. The goal is to determine what happened. Okay? Was it something that you had control over, or was it something that you had no control over? If it's something that you had control over, then we want to address that, make sure you understand it before you continue. If it was something you had no control over, it's important that you recognize that, because you don't want to waste time or treasure trying to fix something that isn't broken. I was talking about this morning in the discussion group. Too often I've seen traders who had great potential, but every time their system, whatever that is, whether it's indicators or whatever, they have a trade that gets stopped out, first words out of their mouth is, "Oh, I knew it was too good to be true. It's not working." Well, if it's indicator driven, whoever wrote the code for that indicator, whether it was you or someone else, when you compile the code, if it doesn't return an error message, that means it works. And if nobody ever fiddles with that code, it's going to work forever. Well, how dare you? How could you say it's working when I just got stopped out? Okay, getting stopped out or having a profitable trade has nothing to do with whether an indicator's quote unquote working or not. The indicator is going to do whatever the person who programmed it told it to do under whatever set of conditions that you use that particular indicator. That's a really vicious cycle to get caught up in, like a dog chasing its tail. Okay? You try something and it's quote unquote working, you're happy, you're on top of the world, you're making big plans. You get stopped out a couple times and I knew it, too good to be true, it's not working. No, it's still working. See, the job of an indicator is not to create profitable trades. The purpose of an indicator is to alert you to when a certain set of conditions exist on the chart you're looking at. And it's a call for you to pay close attention to price, because it's price that creates profitable and non-profitable trades. Not the indicator, not the oscillator. You're learning how to become a trader. You're not you're not performing under the big top with some kind of a trained circus act. It's so important to get your arms and your mind wrapped around that, because if you don't, you'll be locked up in that vicious cycle, always chasing something that works all the time. Again, be careful how you use that definition, works, because everything works some of the time. Nothing works all of the time except the market. That's why our simple little methodology and our humble little indicators do nothing more than alert us to when a certain set of conditions exist in the market, and it tells us when to pay close attention to price. It helps us easily see where our entry should be, where our stop loss should be, and what a reasonable target is. Don't try to make your indicators do something they don't have the ability or the power to do. They can't predict the future. They lag price, but that's okay. They're still valuable because they can help you to see what the next high probability move is. Now, this example that we were just using on gold. Remember when I said that the counter trend move doesn't have the same degree of high probability as the trend move or the trend trade? I actually said this could come down halfway to the BBC and then stop. Now, I didn't know it was going to do that, but so far that's exactly what happened. The swing low so far, 1728 and a half. So from 1730 to 28 and a half, it's a point and a half, and it may not be over, it may not be done. Price may all of a sudden just come barreling down through here, hit the BBC to the tick. It may not. Don't know. That's why I said the counter trend trade doesn't have the same degree of high probability as a trend trade, and that's why I don't publish the counter trend in the alert channel, but I will occasionally mention them in the discussion group. Okay, so we covered the S&P. We had a 9-point move. We had a 43-point move off the trigger at 2760. Now, price has pulled back beautifully to the BBC. And the next high probability move is a move back up to challenge this area where we expect to find good resistance. Okay, that's the high probability move. The only other thing that can happen is this pullback fails to hold. Really? Yeah. There's a chance it doesn't hold. Well, what will that look like? Well, we do know that important prices, important areas are almost always tested. So in this example, in order for price to get back below the trigger and trigger again to give us a third opportunity, in order to get a third opportunity off of this alert, we actually need the BBC to fail. We need it to not hold. I'd prefer to just catch the bounce off the BBC because that requires less waiting around. Over here, we got the trigger, we pulled back, didn't hold, we ran down to the zone, the highest weekly trading zone for the S&P, found good support, got back above the BBC, triggered again, led us to this. So hopefully you'll see how the dynamic here is different than the dynamic here or the dynamic here. If we drop below, in this example, if we drop below the trigger, BBC doesn't hold, we drop below the trigger, we trigger again, then we're going to be running into the BBC from below. And the high probability is that it holds more often than it doesn't. So that trigger won't have far to run from the trigger to the BBC. Because if price drops, we trigger, the BBC will be overhead, and when we approach it from below, we expect it to be good resistance. So that's the S&P, the Dow. Here's the Dow. Same scenario. Okay. It's either gonna hold or it won't. I've just reduced the entire universe of trading to that. The lowest common denominator. So 23,660 to 23,680. That looks like a pretty good opportunity to me. You could even make it 23,640. To 23,700. That's a 60-point move. Let's see, 640. Yeah, to 700. That's a 60-point move. At $5 a point, that's $300 per contract traded. That's the high probability move that we're staring at right now. Could it go beyond that? Absolutely. There's a high probability from here that will go up and challenge these highs. So just because you have a target that you arrive at on your own, or it's part of an alert, you don't always have to jump out at the target. If the chart isn't telling you it's time to get out, maybe you should think about getting out. Now, let's look at it on a smaller time frame. It's 5 minute. See, 5 minute, we're below the BBC. And we know that when price pulls up to the BBC on any market, any time frame, that could be good resistance. So what we could do is we could say, oh, okay, well, based on that intel, I'm going to wait to get long at 23,745. and I'm going to trade it long up to near these swing highs. You can do that. As price approaches the BBC from below, one of two things will happen. It will hold or it won't. It might consolidate for a while, but ultimately it'll hold or it won't. If it doesn't, that opens the door for that window of opportunity. Let's now go back to the 30-minute. That's a real good example. You should maybe take screenshots, and you can do this on your own chart to make sure you've got 30-minute just set up with the indicators on them. Take a snapshot there and roll it over to the 5-minute. Take a snapshot there. Because in order for that 30-minute window of opportunity to unfold, price has to get above the BBC on the 5-minute. Okay. Once again, for the Logic 247 alerts this week, let me show you the recap. And markets are closed tomorrow. There'll be Globex tonight. No Partners Workshop tonight because of the holiday. I will post Concierge Trade Alerts tonight. And if the markets are active, there may be some Logic alerts tonight. In fact, if the market's active, I'm pretty sure there will be. So, up through noon today, 48 alerts, 11 never triggered, 37 actionable, 6 stopped out, 16%. And here's the week. And anyone who's on a trial, you have access to the trial channel. You have access to all these numbers, all these alerts. If you're not on the trial, well, you missed a great week. Missed a great couple of weeks. We start Sunday nights at 6 p.m. Eastern. And Logic is open 24/7, round the clock. Alerts are posted as opportunity presents itself. S&P. In queue. Okay, you have an entry, you have a target, you have a final trade to target. Entry, target, second target, third and final target. Gold, entry, buy, be long. Target, target, final target. Thumbs up means we made it to the target. Red X means stopped out. And on one like this, if you look down at the bottom of the thread, because after so many days, we can't annotate these, so Valerie has to copy it and repost it down at the bottom. There's another stop out on Crude. This is a no trigger. This is, okay. That stop out was on Crude. That stop out was on Crude. And that no trigger was on Crude. Now I brought that up for a reason, because see this? We were caught between these two weekly zones for a good period of time. Crude has now taken a bit of a dive. Let's look at it on a daily. Okay, this is Crude on a daily. Remember earlier I talked about when we looked at the crude daily chart, if we got below blue and climbing, that opened the door for us to go back down, challenge these lows. Now there was a very different picture on crude just a little bit earlier. Let me show you that on the daily chart. This was crude just a bit earlier today. Price was sitting on top of blue and climbing, which is good support until it isn't. It was for a day, it was for 2 days, and see how we get pinched up, pinched up, pinched up, and then finally we get this. Now, this was also an either-or situation. Either the blue and climbing was going to fail to hold it up, or the BBC was going to fail to hold it down. Either or. Now, that question that was asked earlier before Dr. Tom came on, let me scroll up. I'm trying to remember who asked that question. I think what I just went through, I think that addressed your question. If it didn't, while I go to the good word for the day, would you please repost the question, and I'll be happy to address it. Okay, just copy and paste it back into the chat box. For the last couple days, we've been talking about the importance of the cross. 1 Corinthians 1:18. The message of the cross is foolishness to those who are perishing. God dying on the cross for our sins sounds like foolishness to some. Their philosophy is this: if I can't understand it, I won't accept it. That's where they get it wrong. They want to understand a mystery. But salvation comes through faith alone, so that even tiny children who lack understanding can have it. Matthew 18:3 says, unless you change and become like little children, you will never enter the kingdom of heaven. Simple, childlike faith in the finished work of Christ on the cross is all that's required. This is a story about a student who scored 0 on a test. Upset, he said to the teacher, I don't deserve this grade. The professor nodded and said, I agree. But 0 is the lowest grade I can give. That's how God feels about our wisdom. 1 Corinthians 3:19 says, the wisdom of this world is foolishness to God. One day a man stood on the roof of his house during a flood and prayed, God, please save me. Pretty soon a rowboat came by and they offered to take the man to safety. But he said, no, God will take care of me. Well, the waters kept coming until they were almost at his waist. Suddenly a helicopter appeared overhead and a rope ladder was lowered down. And they yelled over the megaphone, climb up. And the man yelled up to him, oh no, God will take care of me. Well, you can figure out what happened next. The man drowned. And when he stood before God, he said, why didn't you save me? God responded, I sent you a rowboat. I sent you a helicopter. What else do you want? At the cross, God did everything required to save you. All you have to do is trust in Him and receive the gift of eternal life. That's a good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with the licensed securities broker or financial planner before making any investment decision.